Today I'd like to talk to you about the two bank account system. This is one of the fastest ways to start your own wealth creation. It's the reason you inherently want to go from renting to buying. And that is because when you go from renting to buying, you are creating what's called a forced savings plan. And you can do this with a system that we call the two bank account system. That is, you want to take your primary income and put it into your primary account. All income lines go into that account, and then you divide whatever your monthly bills are by 4. So let's say $2,000 your monthly bills, and you divide by 4. So every single week, and it's important to do it weekly, and I'll get to that, but every single week you want $500 at a minimum to transfer over. And I would tell you to start with as high as you can go over $500. So if it's even only 501, at least start with $1. But if you can get to 25, 50, or $100 extra, it's very valuable. And the reason is this: if you do $100 extra, at the end of the first month, you will have in that savings account, which is your secondary account, it's where your bills get paid out of, you'll have $400. At the end of the year, you will have 12 times 4 is $4,800 in that account, saved up for a down payment, to buy a new car, for long-term savings, for even something that would, in case of emergencies. The biggest thing is you're creating a forced savings plan. So what happens to your mind is you no longer have to worry about your bills. So every time you have a bill that doesn't get paid, you get late fees. Those late fees are real dollars that you are spending to cover those late fees. And if you set this two bank account system up, you will no longer have to worry about those late fees, because all you have to worry about is, do I have enough money in my account on the day of that transfer to make the transfer? In my own life, I do it on Monday, and the reason is on Monday I'm so busy that I wouldn't be able to stop the transfer if I wanted to, because I don't even think about it. But my job is that on Friday I have enough money in my primary account to make that transfer. Some people need to do it on Friday when they get paid. Some people need to do it the day they get paid, and it depends on what your own personality would derive. But the reason that it's important is because this is what happens to people. So let's say your rent is due next Thursday, because it's the 1st, okay? This week you have, let's say your rent is like $1,000. This week you have $1,800 in your checking account. You realize that it's not till next Thursday. You may have some other income you think is coming in on Monday or Tuesday, so you're not really worried about it. And then on the weekend, you're like, okay, let's go have some fun. So you plan on spending like $200, which is plenty. Instead of spending $200, you spend $4 or $5 or $6 because you had too much fun. And then you forgot about a bill that was due on Monday, and all of a sudden on Thursday you only have $900 in your account. By doing this two bank account system, you never have to think about that, because the primary checking account where your income goes in is the money that you would spend. If the money is being transferred over to that secondary account, you don't have to think about it, because that money is being built up to pay every single bill. The other thing is if you can set up your payments to be automatic, it makes it so you don't have to think about them. And the less you have to think about paying your bills, the more you can focus on making money and increasing your own personal revenue. This is what you're doing when you buy a house, because when you buy a house versus paying rent, your rent is going to zero on the 1st of every month. Whereas when you buy a house, you still have a great deal of your money is going to zero, but you're paying a mortgage down little by little. And if you ever looked at a mortgage sheet that shows what the payments are over 30 years, the first payments is mostly principal, or mostly interest and very little principal, but halfway through the mortgage it flips. And so all of a sudden you're paying down a bigger chunk of mortgage every single month, and over 20 to 30 years, whatever your mortgage is, you now have paid off an asset that has equity, and you now have eliminated your major portion of your monthly living cost. You only have to pay tax and insurance once your house is free and clear. So you're doing the same thing with the two bank account system, but it usually is very difficult to save up a down payment if you're trying to do it via just manually thinking about saving money and saving it. It's good to be able to do that as well, but if you can set it up on automatic where it does it automatically, you don't have to worry about it so much. I hope this helps. You can feel free to call me on my cell phone if you have any questions or would like some help with it. 608-306-1199. Thank you, and have a great day.